What's up, guys? I'm going to do a breakdown of the E-mini. It's September 5th, 2023. We'll start off with yesterday real quick. Yesterday we had a downtrend for the first half, and then we consolidated and bulls made a higher low. Bears got 3 legs down, consolidation, higher low. Today it looks like we have a range with a little bit more downwards pressure. If we have like a trend the previous day and then we range, which is part of the market cycle, so you could expect that, we could see like more pressure from the previous trend. That's not always the case, but we can kind of see that here today. I'm getting rid of these lines right now so we can see this chart better from a channel perspective. So yeah, you can kind of see like the downtrend influence the range. We can extend that to there, that to there, and then a bit of an overshoot. Yeah, kind of something like that, but we'll focus on today. So more so like that. We can leave that. So yeah, so we see the sell from yesterday, and then we see today. Today had a lot of legs and legs within legs. I'm going to try and focus more on leg 1, leg 2s, because I've been getting trapped on the third leg, and if I get better at counting legs, I won't be getting trapped anymore. Those traps were eating up my profits today, but I still managed to scrimp out some gains. So we'll start with the day. So we'll do the legs, and then I'll just talk about the buyers and sellers. Here we have 1 leg down. We'll do an arrow, so 1 leg down, and then second leg down looks like a trap, fails. Bulls get 1 leg, and this could be 2 legs, like 1 leg. This I really wouldn't count this as a first bull leg, but you could. So if that was 1 leg, this could be 2 legs, or bulls can have 1 leg, 2 leg, something like that. You guys can kind of see what I'm looking at. This pullback would make the second leg. Or bulls could also have 1 leg, a failed second leg, or this could be 1 leg, 2 legs, failed third leg here. And with that being said, that would give bears a second leg. Leg counting is quite difficult, I'm starting to realize, because there's a lot of like legs within legs within legs and a larger leg. So let me leave those ones up here. Okay, I'll just delete this one. So back to the bears. 1, 2, cover that up, 2, oh my gosh, this is gonna drive me crazy. I gotta get my arrows under control here. 2, and then bulls get 2 legs. 1, 2. Bears get 2 legs. 1, 2. Now within these legs, there's legs. So see, we can have a nested leg here, and this could be like a failed third leg. So 1, 2, failed third leg. So those were kind of like the leg 1, leg 2s, and then leg 3 in a range is a trap. So that's why I'm learning how to count legs, because see, so this would be like leg 1 here, 1 leg, 2 leg, and then I would like take this flag and get trapped, or I would take this flag here and get trapped, and we've already had 2 legs, whether this be like 1 major leg, second leg, third leg, trap. I got trapped here going short. Let me get the EMA up so you guys can see what I saw. I went short right here and got trapped. I went short here and got trapped. But then look, we can be like 1 leg, 2 leg, failed third leg fails. This is the start of a bull leg, 1, 2. See, and then third leg fails. And funny enough, since I got trapped here, I was like, this is the third leg, and I actually got out at the top of this trend line, and then I got half out here and half out at the bottom of the candle as it turned down. So, and then, yeah, look, one leg, two legs, all downward pressure. Bears made a new low by the end of the day by like one candle, one body candle. Okay, I'm going to start out with trying to identify where the buyers and sellers are within the chart now. Bar 1 is a gap down with selling pressure. Bears sell. I think there are more sellers here, and sellers here. We push into the low of yesterday and buyers start to buy. We can see a failed breakout on this wick here. This is bar 10. Bar 10 is a reversal. We push into the EMA and fail. This leg is big enough for more for another leg down, so I think people had sell orders laced all the way through bars 1 to the bottom of bar 2, and that's what this wick was a reach, and they sold back down. And on the contrary, I think there's more buyers at lows. Bulls had their limit orders set, and that caused the market to move up 2 legs. I think the bears were temporarily exhausted because they all saw this as a double bottom. This is a credible double bottom, I think, that led to 2 legs. Was a good trade. Bar 14 to bars 22 are laced with buy orders until we get to the high of the day, and I think bulls wanted to fill the gap. But bears had sell orders within the close of yesterday, creating more selling pressure, and we sell back down to the EMA. Kind of like the opposite of what happened down here is now up here. I think there are more sellers above the EMA on a range day. Sell high, buy low, sell high, and scalp. Sellers above the EMA, scalp back down to the bottom. I think bulls saw bar 16 as a good reversal and put buy orders all within that candle, and bulls push up for attempt at a new high and fail, with sellers sitting above bar 24. The market sees this as a lower high double top. I think there are more sellers at bar 40 and they're getting laced with limit orders, and we push down and bulls create a lower high with bar 49. Bulls see this as a range, so they buy for 2 legs and hold to the channel high. The market orders did work at the lows, but you would get trapped if you bought a bar like 58 for quite some time. You could scalp out. If you bought the bar 58, you could scalp out at the top of bar 60. If not, you were trapped until the high, which is only 3 points. So if you weren't catching the lows, it was hard to make money. Bulls try and break out of the channel and fail with a good candle, bar 67. And bears go for 2 legs as we are at the high of the channel and high of the range. We see strong selling pressure, and there's a wick out in bar 67, but bears fill the gap and continue to sell to bar 68. Bears are temporarily not making new lows, and bulls take this as a buy because I think they see this as like some sort of lower high. They buy but fail. Bar 75 is bad follow through for the bulls, and I think they dump their orders. They would want to see continuation quickly for a breakout. This causes bar 78 to be a reversal. Bar 78 takes out the bar 74 low, causing more selling pressure to a new low of the day. I'm going to try and keep the same structure of breaking down my videos in terms of counting legs and then identifying where buyers and sellers are. If you guys learned something, don't forget to hit the follow button. Have a good day.